where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, happy Father's Day, everybody here. And tonight's video, I'm just going to do a brief overview. We're going to talk a little bit about the Fed setup and what's going on this week. So let's get into tonight's video. Well, welcome everyone. Hopefully somebody will show up tonight. Usually there's folks already signed in. We'll see what happens here. I'm a bit late, to say the least. I'm just going to do a quick overview of what I think is going to happen this week, talking about the Fed. We'll talk a little bit about some of the economics that are coming in, and we'll just see how everything sets up here. But let's talk about the Fed first. There's very little. I think the Fed funds are around 25%, give or take a little bit, of expectations of the Fed to lower the rates. And that is very possibly probably about the right amount. I think there's almost zero. There's no reason for them to do anything. We are starting to see the continuing claims and some things like that are starting to show up and actually see some weakness maybe in labor a little bit. Those things are going on. But the Fed themselves, I don't think they have any relevance. Let's face it, Jay Powell is out of a job, I believe, next May. There's no way that Trump is going to do much. And I think they're going to try to almost put like a shadow Fed that the new incoming, there'll be some statements by people in the background that are possibly the ones that will come into the Fed position. We'll see how they do this. There's a couple of favorites out there, but the bottom line is they're probably going to go, well, whatever Powell says doesn't matter because this is where we're going, and so they'll try to front run him. I think that's actually going to be a thing. And I'm just hoping that Trump doesn't try to make the same mistake that Nixon did with Arthur Burns and try to have a highly politicized Fed that Trump is really influencing. I hope that's not what happens. I'd rather have a more independent Fed since we have to put up with them. But right now what we've got, it looks like just a opposing Fed where Powell doesn't want to do anything that's going to help Trump. The interesting thing is, folks, it's starting to become, I still think it's a little early, but it's starting to, in my opinion, look more like a possibility of the whole inflation, all that. I'm looking for a bit of a bounce, but this whole scenario that they scared everybody in the market and how we got down 21% earlier in the year, all that was pretty bogus, and they're not able to bring up that narrative of how the tariffs are going to be inflationary and all that stuff, and typical hysteria around anything Trump says, and seeing this whole thing go down. We saw the No King protest around the country, and that was sort of a joke. I'm not even sure what all that was about, but I think it was just to oppose Trump on the day with floating tanks through Washington and the military and all of that. So it's just kind of, there's just a lot of noise in the markets right now. So I don't think there's much there either. But I think when it comes to Fed, they'll do nothing. The statement will be benign. They're going to say we're still watching the data, all that stuff. I think it's probably going to be pretty boring. Typically, there'll be a statement or two that Powell will make that might kick things up a little bit. But for the most part, I don't have much expectation. So let's just talk a little bit about some of the things that are coming out this week. It's a fairly big week. We've got Empire State Manufacturing coming out. that's expected to be down over 10%. So we're starting to see the economy start to slide. We're getting closer to my magic number of Q3, where I'm expecting to see a fair amount of slowing down, and I think that will be the case. But on so Monday, that's all. So it's pretty nothing on Monday. But on Tuesday, we get retail sales. That will be interesting. Capacity utilization also be out. But the big days come in, will be obviously the FOMC announcement we're talking about. So everybody will be somewhat focused on there. And we've got the housing starts, a bunch of numbers coming out. And then I noticed that the forecasts for initial claims are going up. We've been running around 235 to 245. We're now seeing estimates of 257, and the consensus between 253 and 257. And as far as the continuing claims, it's at 1.956. And I've been telling you for a couple years, these numbers have been pretty static around that 235. They're just kind of rolling over every week. And we're seeing some things to come in here, and possibility of seeing the employment numbers starting to tick up maybe as we come in more into July, August, and go through the summer. So one of the things that I will be, we do have, this is my least favorite time of the quarterly cycle, which we're going to get the contract rollover. So we have we're looking at a moderate upside, but we have the premium in the rollover. And when I show you the charts, I'm going to go ahead with the rollover, just get it over with, so we can start to normalize things. But the markets are really basically flat, even though on the charts I'm going to show you here in a few minutes that they'll be highly elevated just because of that. So let's set this up. I'm going to go through things really quick. It's going to be a brief, it is Father's Day. So I'm just going to do a really brief overview of everything. We'll get into more things tomorrow night, and best thing to do is get to the Substack, kendallreport.substack.com. $8 a month, free 7-day trial, and there's a $80 a year option right now. I think that's going to be intact through June, so that will go away after June again. And so anyway, so let's go ahead with, after talking about what's coming out economically, let's go ahead and kind of get into we'll do a quick look at the WaveTech database, and then we'll just hit the indices really quick. We'll just set some things up. Probably just do maybe the S&P and NASDAQ, and then we'll do a couple of the markets. I'm not going to do a full review tonight. So let's go ahead and get into that section. All right. So going into the research here, we are now at 50.68. So we did get a little bit of traction on the intermediate. So we're still improving. So I'll show you a couple of things that, like I said, the premiums are probably going to set some things off that are going to make things look a little better, but the math is the math in the end. So on a short-term basis, we saw quite a few selling. I'll break that down. But on an intermediate, we saw over 1,000. We had 1,067 new buys and only 180 exits. So we had really bullish to positive rotation going there, which pushed us up to the 50.68. So the metrics here on these things are around 52 is where we'll go 48, 52. We'll see if we can get above 52. Then it's 58, 62, and there's some other numbers. We'll talk about those when appropriate. So let's go over to the daily numbers here real quick. And we're right now at the 76.87. Like I said, we had, let me zoom in on that. We had just over 1,400 exits and only, 186. Yeah, I'm sorry. I'll get this right. 86 exits are new entries. And so the database is trying to stall here. It's still very positive at 76.76%. So there's plenty of solid rotation, and now we're up above 57. So from the standpoint of the markets, just looking from the database viewpoint, we're definitely getting some of these positive rotation here. The underlying foundation I talked to you about is building. It's not getting worse, so we're not getting more negative at the moment. So we're seeing a building of that intermediate database. And I'll go through maybe sometime this week. I'll look at the metrics looking forward as far as where we are right now on the intermediate, and I'll break that down more, maybe even do that in the Substack tonight. I'll take a look at some things later. All right, so let's go ahead and let me just come up full screen here. I'll pull up the wrong metrics. Here we go. Yeah, so let's just take a look here. This is the S&P. Like I said, it shows that if you look at where we are right now, it shows that we're up 1%. Well, we're not. That's mostly the rollover. We're actually up 5.25 on the session, so it's basically flat. But this rollover premium is showing up here, and that's triggered the algos into a that's triggered the algos into more of a positive mode because of this premium. So once again, it's still that same kind of range. We're still climbing these moving averages. The algos are flat. There's still no VIG here, so I'm not looking for any kind of big rally or anything from here. We're really just looking at more of the same. There is a little bit of potential of moving up. We're probably with the premium rollover, we're back to maybe about a 1.5% off the all-time highs. So that premium might be enough to get it up into an all-time new high. I'm still pretty convinced that if we get the high, that we'll get a rejection out of there and markets will pull back. It looked like maybe we'd get some pullback because of the of some of the negativity from the Israeli situation going on, but that's already faded. I went through on Friday. I talked quite a bit about it. Maybe it was on my Twitter open spaces that I did on Friday, just kind of willy-nilly hung out. That we only had like 50 people. No one knew I was going to do it, so I just kind of did it. And we had conversation. But one of the things that I talked about is all of these international conflicts that happened. The Gulf War was the biggest one. I think it was about a 16 or 17% decline, where the U.S. was directly involved in these things. And from the standpoint of most of these things, they're like less than 2 weeks that they have any effect. And I think the overall effect was somewhere around 2.5% or something like that. So let's go ahead and take a look at the weekly. Just to set up this week, that might be a little bit helpful in trying to figure out things. So with the week, even with this big jump in premium, we're still seeing the weekly, that V top that I was talking about is still there. So it looks like we've got some kind of peak momentum. We should start to move back toward the 10-week moving average, probably the 40-week moving average. That scenario is still in play. There's not, like I said, there's not a lot of VIG here, but you can see the big mountain decline here where my cursor is in the middle. It's just kind of showing this loss of momentum, and there's really no acceleration in ppm 1 or 2 from there as well. So let me just reset something here. Yeah, so we look even at the, we're getting right to the level where even the 200 is going to start to see, 200 week is going to start to roll a little bit. So let's go ahead into NQ. Like I said, I'm going to go through this pretty quickly so we can all get out of here and back to our families. Yeah, we look at this is NASDAQ. We have that same rollover. Everything's pointing to come back into momentum to be lost over the next several weeks. Like I said, we're coming into dog days. I don't expect the Fed, I think, is going to be a total absolute nothing from the standpoint of any effectiveness or anything they're going to do. Basically, the Fed's neutered from the standpoint of their actions are going to have. There's nothing they're going to do. It just doesn't. They're totally irrelevant. And so all these indexes are showing the same thing here on the weekly. So I'll bounce to the daily real quick here, but same pattern as the S&P, drifting and fading momentum, not really looking for anything at all. So let's go ahead. Let's take a look and see what the 10-year looks like. I don't expect there's going to be much of anything here at all. Like I've been talking about, I'm really expecting, we got down to the 434 level, bounced right back to 442. So 30 is about the extreme here, and about 50 is the upside. So we get about a 20 basis point move that we're going to do in there. Nothing to be extraordinary going to come out of here. I mean, I'm telling you, folks, I said this, I think, 2 or 3 weeks ago, that I'm hoping that this isn't the conversation we're having 3 weeks ago. So 3 weeks later, here we are 3 weeks later, we're having the conversation, which is no big, no momentum, no reason to do anything. The only probably black swan or event, which we saw when the Israelis started bombing Tehran. Now they're all getting bombed, which I think it's interesting that Netanyahu launches all these bombs and missiles against Tehran and sneaks out the back door to Greece. That's the kind of leader you want, right? Put your people at risk and then split. But other than if something went really awry there, hopefully the U.S. doesn't get involved in this stuff. They're trying to sucker them in, I think. But the point is that we're not seeing any momentum, not even with that influence around. We're not seeing anything going on. Those of you who've been around the channel for a while, you might remember about 2 or 3 weeks before the election last year, the forecast by the algos were out of nowhere. It was really strange. It was just vertical move up was being forecasted right on election day, which was interesting. We all know what happened, but we're not seeing any kind of echo anything that's going on. And typically, because the algos are looking back at what's happened and trying to doing their best to predict what's going to happen in the future, when you get this elongated period like this where it's just choppy. I mean, we've been in this chop, really just gradually moving up off of the extreme lows after we hit 21%. You have to remember, we had just on the S&P, I know the number, we had 11.1% range in one day, over 10% range. So you're looking at just one day. After that, all we've been doing is grinding higher and grinding higher. I think the markets are tired. I don't see a big collapse, but I still think they're going to drift and roll a little bit. I still think there's a good chance for the equity indices to get their 200, and we already did the 200 move here on the 10 years. So we've already kind of corrected, and we're just still have a slight upward bias on the back end of this yield curve. And with the expectations out there, there's just nothing there at all. So let's do this. We'll do gold and Bitcoin. Call it quits. We'll be out of here in about 10 more minutes. So let's go ahead and do that. So gold had a nice bounce with the Israeli thing. But look at here. All the algos over here are forecasting just coming back in, flattening, probably climbing back or dropping back to the 10-period moving average. That number right now is 3387, 3390, probably right back to those numbers. We still have that upward slope. Everything's still very bullish. Intermediate, long term, everything's bullish on gold, and that's not going to change. You can even see there's an upward slant to the forecast of the WTRs. These dots are the future forecasts. Everything's still basically the same. So let's go ahead and go to Bitcoin. Same story. Bitcoin's a risk asset right now. We saw it decline with the Israeli situation. Sometimes we'll have, very few times, we'll say 20% of the time it will act like an alternative asset in certain circumstances. It's just acting just like a risk on asset, and there's nothing here. But once again, momentum, soft, slight decline on the daily. The weekly is, if I recall, let's just bring that up. The weekly is, we still got these big fib targets on the weekly up here. I'll just put those out there. Bear with me, just trying to. There they are. 134, 157, 171. That's these green dots above the market. That's still a valid move. On a week, since this is a weekly, this I've been talking about. We had a few weeks to get this thing going. We're still at a very vulnerable stage, somewhere probably coming into, let's say, into the 1st of July. So we finished June. There's a very strong chance that we're going to see a full retracement. If that happens, I don't see a collapse in prices. What I see is us going back into the trading range and taking multiple months to recover again, just to get to the stage. We actually made a new high here just above 112. I think the high was like 114. Let me bring that up. I guess it was just that 112 number. I thought it had printed above that. So we got to 112, pulled back in. We tested basically 100,000, close to it. So we're still just consolidating. The red dots are suggesting flat. I mean, these markets are so boring. There's nothing here. So we show up every day, and the markets seem not to be showing up every day. So, you keep looking and paying attention. Maybe there's some event unknown that could trigger these things, but looks very unlikely. Markets are very predictable at the moment. So let me come back up and we'll finish up here. Yeah, so there's something that I talk a lot about. Sometimes the markets become very predictable, and they have been very predictable in my opinion, for a number of weeks. There's a lot of folks yelling to the moon and all that stuff, and we actually had a pretty good month in May, and kind of continuation. I think we're up around 7%, which is a decent move, but it was mostly a recovery rally. So we're still kind of recovering from that decline. A lot of people say, "Oh, we're in a bull market." No, we are not in a bull market. Okay, bull markets don't look, act, or do anything like this. The fact that we bounced off a low 20% does not mean that's a bull market. That's something somebody made up on the Financial News Network, FNN. That was pre-CNBC. They finally got rid of all the old people that were on there because they cut a hell of a deal when they sold that company. And all those anchors and everybody got these long-term contracts. So anyway, the reality is this is just, I don't know who made up the 20% bear market thing. Anyway, if you look, is the typical declines are 20%. So when I yell that we're in bull market territory, that's usually the end, just like it was a few months ago. We got down 20%. We're in bear market. That was it. You should have been buying there. But of course, that whole bear market deal, like I said, that one day we had 11% gain. The day that the shock wave hit, we completely reversed that day, and has been grinding up ever since. So anyway, this is going to be a really short video tonight. I hope everybody had a good day. I'm going to go back to family and hang out with them. So I will talk to you tomorrow night. We'll be on at 8. We'll see what kind of market action we get and see how this week flows. I have a sense it's not going to be that exciting of a week, but hey, it's the markets and anything can happen. Anyway, have a great evening. I appreciate everybody watching.